This is the briefing for Friday, November 14th. Well, we had a down open today, but then the indices recovered and recovered fairly nicely. But what's important here is that they recovered right to important key reference areas. Now, this is the open for today. This is the spiders on a 60-minute basis. Now, typically, I watch these buying candles and selling candles pretty carefully because typically it will suggest the potential for an exhaustion move. And in this case, that's exactly what happened. We got the move down, and then of course the spiders opened right here, right around the 665.30 area. Then they sold off down to test support at the 662 area before all of a sudden having a huge move back to the upside up to 670, away from this key reference area, this support area, and then traveled all the way up to the 675 area, the next level of resistance, before pausing and spending the rest of the day pausing just below that level. Now, the key to this here, this reversal candle, was volume. You can see volume came in, so there was a lot of volume that came in here, but then buyers stepped in, the dip buyers stepped in, and with a lot of volume drove price all the way back up to the 670 area before the next hour of trading began, and we got the next hourly candle back up to 675. Same thing occurred in the Qs, and you can see that right here. We had 600 as the next level of support, as I discussed in the briefing. We traded below that slightly, right down to about the 690 or 597 area. And then buying came in and drove it all the way back up again. You can see huge volume coming in. So this was an exhaustion move on the move to the downside. A little bit different with the Russell. Russell traded well below support. And then, of course, we had buying that came in the same respect as the other two indices and drove it back up above this 237 area before we got rotation just above it. Big volume on that move as well. Important to this also is that on after the first hour of trading, volume absolutely collapsed. So it was not that great, and it collapsed the rest of the day. The one thing that I typically point out in trading, there's never anything that's 100% sure, but I talked last night about watching for a lower low below yesterday's low, but watch for a divergence in breadth, which would signal a rotation back up again, mainly because we were at an oversold condition in the NYSE and an extreme oversold condition in the NASDAQ, and I'll get to that in a minute. So you can see that right here, this is the opening candle, and you can see there was no divergence there. Now, as price improved, breadth improved slightly as well. But you can see we still ended the day, even though we were higher than yesterday's close, or right around yesterday's close, we still ended the day higher with negative 132 shares in the S&P 500. In the NASDAQ, things improved slightly as well. Ended up the day with 700 shares positive, but not anything that was really strong that would suggest this is the beginning of something greater in terms of a potential rotation all the way back up to test this 626 level. No divergence really at the open. You can see maybe a slight divergence in market breadth with the Qs, but really nothing that would suggest a strong strengthening within the index itself. Negative 700 shares in the market breadth, not a strong rally from an internal perspective. And the same thing with the Russell. You can see large volume, not much of a divergence in Russell breadth. And then it ended up closing the day negative 225 shares as well. So while the rally in the first 2 hours of trading seemed like it was very impulsive, it was not strong from an internal perspective, at least at the close of today. So the important aspect is going to be what do we do tomorrow? Or I'm sorry, on Monday. Tomorrow I think we're going to take off and have a restful day. But anyway, the key to Monday is going to be 675 in the spiders. We trade much above that. That's going to trade up. That's going to open up potential to 685. The key also is going to be this low right here, which comes in right around the 670, 60 area, if that shorter term rotation is broken to the downside, that increases the probabilities that this candle is going to get retraced, and we're going to see another test of 660, the 662 area. And if that's tested after being tested once and twice, then the probabilities are such that potentially it's going to get broken through, and then we'll have to look at a longer term chart to see what the next level of support is. Same thing with the Qs. Watch this area of rotation right here on Monday. Breaking to the upside is going to open up potential test of 616, 617. But if that's tested, it'll probably open up the possibility to trade up to the 626 area as well. Breaking to the downside is going to open up a test of 600. And then, of course, below that, we have to look at the longer term charts. In the Russell, a little bit different. In the Russell, you can see that we had this area of rotation right through here. That lower extreme came in right around the 243 area. We traded through that, traded through the 236, 237 area, and then back up above it. Russell looks like it is much, much weaker. This area of rotation is important. Watch this high right around 230, 238, 239. And then, of course, if we trade through 237, that's going to open up a higher probability these candles are going to get retraced, and we're looking at much lower prices. Keep in mind, this looks impulsive on a chart. It is not impulsive from an internal perspective. We had negative net volume, and negative net volume. Volume was lower on the rotation and on the second hour of trading. So it really does not appear to be a strong rally at this point in time. Now, as I say all the time, there's trading is a probability assessment. So we have to keep into consideration that the probability assessment, there's also a chance that you're going to see some type of rotation back in the opposite direction. So that's kind of where we stand in terms of the shorter term outlook for the indices. And just keep in mind that while we worked off an oversold condition almost in one day, this was not a strong move to the upside, and we ended up the day with breadth negative and net volume negative as well. Looking at a little bit longer term, you can see this is 660. This is next longer term downside support for the spiders, and we came pretty close to accomplishing that in today's trading. You can see 52-week highs minus 52-week lows continue to decline. Breadth improved slightly on a daily basis, but it's still negative. This is NYSE breadth, negative 558 shares, and net volume was negative as well. In the Qs, we're looking at right at this 600 level in terms of being at support. If that's broken on Monday, we're looking at about the 582, 584 area. And then below that's going to be about the 560 area as well. Volume increasing on this move, but this was really an up move in today's trading, accompanied by an opening gap lower. Breadth improved slightly, but negative 700 in the NASDAQ, and net volume still negative as well. And then in terms of the IWM, it has already broken through this support level at 236. But traded back above it, so that is still support. And then, of course, if we trade back above 236, that's going to open up trading back up to the 250 area. And then finally, looking at overbought and oversold, you can see we were slightly oversold yesterday in the NYSE. We were extremely oversold in the NASDAQ, so we worked off some of that oversold condition. This allows for another thrust to the downside in the indices. So while it doesn't necessarily give us a high probability move to the downside, we have to be open to the fact that a lot of times we see it get to an extreme oversold reading. Then it's worked off in one day, and then you get another thrust back to the downside. So just be aware of that in Monday's trading. And then in terms of total volume, you can see total volume in the NYSE is basically flat, down slightly in the NASDAQ, but net volume, I'm telling you, this is really, really very concerning with the NASDAQ. Not so much with the NYSE, but you can see that the trend is still down in the NYSE in terms of net volume, where there's more selling volume than buying volume. So we just want to be very, very cautious of what's happening here in terms of these internal components of the markets. So watch the short-term key reference areas that I just discussed in today's briefing, and just be very cautious. If these levels are broken, if these short-term levels are broken, and especially in the NASDAQ, that's going to open up trading to a longer-term key reference area, which is going to be greater in degree of time and price. Alternatively, there's still a possibility that the internals could strengthen on another move back to the upside and support another rotation back through this range. And as you can see, this is really a rotational pattern on an intermediate term time frame. Same thing here. So it is obvious that potentially we could see another rotation back to the upside. The internals did not reflect that in today's trading, but that can always change. But for right now, I'm going to be watching what happens when if we break outside of these short-term rotational patterns, and that would tell me where we're going in terms of the next level of potentially intermediate-term key reference areas. Have a great weekend, and I'll pick this back up on Monday.